What's up? Good morning, everybody. Welcome aboard. Happy New Year. We are back. It is January 2nd, 2024, and not much has changed since last week. and we didn't expect a major change like there's a starter button where suddenly we're in the new year and markets resume to major action. I think that, when you look at the charts, these are the short-term charts on futures. And right now, the Nasdaq and the S&P are getting hammered. Here, let's go to the bigger chart so we can give you a better view in a daily. First of all, so we look at the overall futures market. The S&P under pressure, and not a surprise. We've been talking about selling potential call spreads all along. Well, now obviously the overbought condition in the S&P has been resolved. We are retracing back towards the mean. So from this point forward, all I would really look at, and we'll get more into the charts of these as well, but all I'd look at right now is if we hold support, I would look to be a potential seller of put spreads. Again, I'm not ready to get aggressively involved yet in the market because the action is not there for us yet. Okay. The Nasdaq futures, we are right at the mean, and the same thing applies. I would certainly look, if I were going to do anything here, I would use the 0 days to expiration, the 0 DTE options to sell put spreads for today, okay, and look for a hold and a potential bounce from this level. But once again, as you see, we kind of rounded off at the top last week and created and took care of relieving those overbought conditions. We go to the Russell, okay, the same thing that had done earlier, but still a long way to go to come back to the mean, as well as the Dow. Now, the Dow is still up there holding. So if I were going to look at it, the overall trade just on the big indexes before we break them down is sell put spreads and the Nasdaq, put spreads in the S&P, nothing in the Russell, and sell call spreads in the diamonds or the Dow. Okay. But as we take a look at our charts we watch every day, okay, the Apple is broken now down and it's gapped lower and broken below the mean, and it's broken below, it's well below oversold. Okay. So again, we should let this resolve out and see where it finds a level. Certainly, we're not going to jump in at this moment. We're gonna let it trade out and watch. But certainly, you can see that there's a little bit of trouble in Apple right now. In Amazon, you see we came off those tops. Here we are back at the mean. Now, again, I'm not looking to be overly aggressive in the market right now because the conditions of the market are not telling us that we should be overly aggressive. I think right now what you should be watching for is for opportunities. And again, if we would go all the way down, and for example, in Amazon to 144, I'd be looking at 147, 148, 149. I got no interest right now. Okay. Coin. Even with Bitcoin exploding, and again, one of the things you do learn to recognize, hopefully you're learning here on markets, is when markets get too carried away in one direction, and certainly we were overbought, and we mentioned and recommended selling call spreads in the Coinbase for quite a while. You're seeing the market pull back, and it's coming back to the mean. Just because it's down $8 or $9 is not that big of a deal in a stock like Coinbase. Certainly, if we come down to about 150 or 155, I would look to be a seller of some put spreads. But once again, I will repeat myself, not to be too redundant, but I'm not interested in getting overly involved here. The market is just because we're to the calendar turn doesn't mean that the market's ready to trade yet. And it's still very, very quiet. Meta, okay, is also sold off a little bit, quite a bit. And here we are right back to the mean. So if you've noticed the theory and what we've been going with based on the conditions of the market, we've been looking to sell premium either at extreme to the upside or extreme to the downside without getting too involved, without taking an enormous amount of risk here. Okay. Basically, what we've been doing is putting ourselves in a position just to grind out, excuse me, some small profit while we're waiting. Okay. Google, You can see also. So what are we seeing here now? We're seeing a lot of stocks have come off that overbought condition and have retraced or coming back to the mean. So what does it mean we're going to do? Well, now we're going to start looking to see if we're going to be in consolidation or if we're going to get ready to move. But anytime we're back around the mean, excuse me, I'm going to let the market tell me and decide for me which is the way that I want to trade from here. And when we're in the middle of nowhere, there really is not much of a reason to trade. And of course, as we look at the IWM, okay, and again, this is kind of in the middle of nowhere. If it comes down to the mean, we will look to sell some call spreads here. Some put spreads here, because now we're going to see a reason to get involved here, potentially. And of course, on Monday, the 8th, the IWM is going to go to the zero DT options as well. Okay. But here, there's nothing for me to even look at. Okay. Microsoft getting hammered. Okay. And we're now at an oversold position. So now, if we can continue to see this thing be oversold, we would then be looking to sell some put premium, looking for some retracement. Remember, the markets don't go straight any direction. And when we're in this consolidation phase, and certainly you can see the consolidation, which we've been watching for the last couple of weeks. And you can see the overall consolidation we've been in for the last couple of weeks. So here we are down towards the bottom. And certainly if you were going to look for a trader, I would have not a problem selling put spread. That's the only trade that I would make. NVIDIA. And again, here you go, right back to the mean. So we went from a market that was all overbought, especially in the NASDAQ stuff, okay, to now a market that is not oversold yet. Most are just retracing back to the mean. So now you look at it and you go, so what's the right trade? Well, you want to make sure you want to find a support level now on these ones that are selling off so that you can find an opportunity to get long. And I'm still recommending the way that we get long right now is by selling premium, because I don't think that we've seen any major action yet. And we do have a jobs number coming out on Friday, and we've got some other things, and we need to get a better idea, not to mention that it looks like the interest rates, although we keep hearing there's going to be a cut, the bonds and the notes are getting hammered today. And so what does that tell us? Well, again, what it really tells us is that right now, for this morning, interest rates are rising. When the futures markets are falling, that means that the interest rates are rising. Those are the bond and note futures are inverse to interest rates. So we are now rising on rates. And let me just get a quick view here. What is the 10-year right now? Hold on one second. The actual rate of the 10-year notes right now is just under 4%. Okay. And if you remember, about a month or so ago, we went up to 5%. Okay. And so we've dropped 25%. So this may just be nothing more than a natural reaction. But certainly the street is pricing in a potential, that they think there's going to be rate cuts. So now we go back and look into the Qs. And of course, you see the Qs are now back on the mean. And of course, if we can hold some support around 400, I would sell some put spreads there. Okay. Square, again, same thing, came right back. So everything is done exactly as we expected it to do. We expected when it got too overbought, we expected to see a pullback. We're getting it now. So now it is the idea is, where do I get involved again? Well, I could use, if I have a legitimate support level, okay. And I think in Square, for example, or Block, I think legitimate support's at around 72. If I'm at 72, I would consider selling some put spreads. Again, we're not always going to nail it as perfectly as we nailed it just now, okay? But we are going to always use the same type of theory behind it, okay? And the SPY, of course, has not come back to the mean. It's kind of in the middle of nowhere. So the SPY has got nothing for us really to do. The Qs are close. The diamonds, where are we at on the diamonds? The diamonds are really, more at the upper end still. So certainly we'd be looking to sell some call spreads here. Okay. And Tesla, okay, which is right at the mean and holding at the mean. So once again, you can see the way to get involved and to potentially trade into these markets. Why? Because again, we don't care about the news. We don't care about what everybody else is selling us. We care about one thing. What does the chart we're looking at tell us? That is all that we really care about, is what is the chart telling us? And the chart is telling us that many things are now relieved that overbought condition. Okay. And now we're coming back towards the mean. So now it would be, we'd be looking for opportunities to potentially buy it, because here's the assumptions that we are going to make. Okay. Assumption number one is that the markets are still in an uptrend. Okay. They are not as dramatic as an uptrend as they were, but they are still definitely in an uptrend. Okay. So if the market is in an uptrend, we want to look for a spot to get long. So we're looking for a pullback to support to get long the market. Okay. So that's all fine. So now, we look at the stocks that we're trading. Okay. And the group, and you could have your own group. Here is Win certainly getting a big boost, and probably a little bit overbought. Okay. And again, does that mean that we run in and sell it right here? No, but you can certainly understand that you're now in an overbought condition, and there might be an opportunity to be short. Again, remember, when we're dealing in markets that are really relatively quiet, okay, and you can see by the volume, we are relatively quiet, that we're not interested in getting so dramatically involved in these markets for that very reason, because there is not a dramatic amount of action happening. So when you think about it and you look at it from the other point, so if you look at this business, which is a competitive business, okay, and you look at it from the other side and you think to yourself, well, if nobody's getting really nervous or crazy or active, why would I want to do something? Why am I trying to find a trade that may not exist because the markets are very, very quiet? Okay. Because again, no matter what's happening, no matter how much we're up or down right now, we are still in a very quiet atmosphere. And there's not a lot of crazy things to do. So we really need to see, and would like to see, some volume participate in this market to show us there's either a little bit of fear or a little bit of excitement. And right now, the markets are not showing us much of anything, neither fear nor excitement. It's kind of just all right now matter of fact as to how we're trading. And so we can use these levels, but certainly I'd be looking at Win as a potential spot at resistance. Certainly, I'd love to see a little more volume here. But I think you have to always remember that overall, the tape in the market will tell you all that you need to know. And as we go back and look at our little short-term charts here, here is, if we were looking to make a trade, this would be a potential trade to be a buyer of crude oil as a trade. Again, not as anything long-term. These are very short-term type of trades that I might be looking at. Okay. And again, what you want to remember is just to keep yourself, very, very relaxed and not trying to outguess or outsmart. Notice that we had a little bit of a rally in the NASDAQ, but again, look at the volume. There's really no activity in that market. So again, why would I want to get so overly involved when I can obviously see the lack of activity, the lack of volume that's going along with it? So the only thing I can see right now that shows me anything worth looking at would be, as I said, potentially crude as a buy. I didn't make any buy there. I didn't do anything right now, but if it shows up, I would look at it. But I think you have to, again, you have to learn in this business to be very patient, okay, and not try to overindulge yourself into markets that aren't showing you much action. And right now, again, you can see by the lack of movement that these bars are hardly moving. So there's no fear, there's no FOMO, there's no nothing. It's just the markets are trading what we would say very matter of fact right now. So if the markets are going to trade very matter of factly, then there's really not an edge that we're going to be able to build in for ourselves. And without an edge, why would we want to trade? And remember, we don't get paid by trying to make a lot of trades that don't work. I want to be here. Okay. We get paid by being able to read the chart and see the price action that's in the chart. Okay. And right now there is very little. Yes, there's some relatively solid size movement, but overall there is not very much to do. Okay. Again, I could say, oh, well, you should have sold gold. Well, no, I'm not going to say that because I didn't sell it. I would never tell you a trade that I wouldn't make myself. I'm not going to make up trades just because they look like they could be winners. Right now, it's a great market to sit it out and wait. And what you really need to see is you need to see a move somewhere that not only includes price, but it includes volume. Okay, like you see in crude oil here. And again, I didn't make any trade there because it's really not active enough for me to even think about wanting to get involved right now. Okay, but it is something to look at, and it is something that we should be paying attention to if we're going to make trades. So the way that I would look at it right now is, again, I still like to sell some premium if I can find some premium to sell, and certainly I would think that put spreads in the Qs and in the SPY maybe, but certainly the Qs would be number one because they're certainly taking the biggest amount of punishment this morning. But again, my one concern is the lack of true real energy to the market. And again, it's not that I'm surprised that we're not seeing a heck of a lot of energy. Why? Because again, at the end of the day, okay, there is not an overall reason for the markets to be all that active. It's still kind of like the holiday period. It is still people on vacation. There is still not a lot going on, and certainly not a lot for me to think about getting overly aggressive here. This is what you have to be able to separate as a trader. Okay, you have to be able to separate the noise from the nonsense. And right now, these markets are kind of more like nonsense and noise. There isn't much activity or any reason for me to think about getting overly involved. So why would I want to get overly involved? That's what you always have to remember. Think about it from a greed standpoint. What's in it for me? Okay. Can I make any real money right now? What is the best benefit for me as a trader? Okay. And if you can't find a reason to get involved, then you probably shouldn't get involved. Okay. Again, creating trades just to create trades is never a wise idea, because all you're really doing there is churning your own account. Okay. So don't think about churning or creating trades that don't exist. Look for what you can find is real. And the other problem is you sometimes see that mirage that shows up in the market because you're staring at it long enough, you force trades and you make up things that happen. Again, I would warn you that right now, in my eyes, okay, well, I'll put it this way. I got a couple more things to do, and then I'm going to play poker. Okay. I'm not going to be trading the rest of the afternoon. Okay. Because there's just nothing for me to do. And I can only find trouble for myself. So hopefully you'll take some of these notes and you'll say, you know what, maybe he's right. Maybe there's times that I shouldn't be trading. In the meantime, have a great day, everybody. We'll see you back here on Thursday. And until then, just be careful. Again, markets don't announce themselves, but right now you can see that there's very little action. Have a great day, everybody. We'll see you later.